What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Apple stock, ticker symbol AAPL, on a variety of time frames in anticipation of the next trading day, Tuesday, February 27th. Alright guys, so Apple stock here today finished the day down $1.36 a share, 0.75% to the downside. It is down 13 cents after hours. Listen, as far as after hours movement is concerned, this is a really good rule of thumb. Whether it's in your favor, sideways, or going against you, when volume is, too bad we have this data, we have this 6 million volume candle. Now, a lot of times this is going to be a data glitch. By the way, there's so much of a, essentially, what I would call a monopoly as far as data getting fed to brokers. There are like a few data sources that all the brokers buy their data from, so when there's one glitch, it gets pushed out to essentially every broker. That it's like impossible to tell when a volume candle that's very large is, this one is, I wouldn't be surprised, but it's impossible to tell when a very large volume candle is a glitch or realistic, as long as it's within the realm of what could be considered realistic. But regardless, after hours, volume is going to be very low. So unless it's an earnings event or a catalyst that really beefs up the volume, take the movement with a grain of salt. Now let's start here just really briefly on the 1 minute chart, because you guys know I'm a scalper at heart. Scalp trading is what I do every day. So I'm always looking at ways to potentially generate some scalping revenue around a core position, even on a stock like Apple. Now Apple wasn't what I would call in play today. 99% of stocks every day are not going to be, but I have a setup in my playbook called the repeat offender. And I actually alerted Apple today because we had this really clean bounce setup off the -2 standard deviation band off of volume weighted average price, which, I mean, this is essentially just a subconscious, psychological, self-fulfilling prophecy level, right? That's all it is. Unfortunately, we didn't really see a bounce out of that setup, so wasn't able to take the trade here on Apple, but it was alerted. And that's typically the style of setup that I'm looking for on Apple. Of course, Apple, it's not going to be in play most days. Fresh news catalyst, elevated relative volume. Of course, that's pretty rare for a stock like Apple, but it's one that I watch every day for setups like this because they have edge. So if you guys want to come scalp trade or just intraday trade with us every single day, with me every single day, come join the private trading group, the Roensch Capital Gold server. You can take a look at that at the first link in the pinned comment. Now let's move on here away from the intraday mentality and start taking a look at the day-to-day mentality. Starting here on the 5 minute chart, it's going to be probably kind of tough here to look at volume because we had that big candle on the first 5 minute candle after the closing bell. But really what I want to do is look at intraday volume to see if there was any correlation on big moves with big spikes in volume. For example, I'm looking at this downside move off the open and then this kind of recovery pump mid to early, well, I'd say early afternoon. All right. Now, honestly, guys, the volume on the the mid-afternoon, early afternoon upside move was basically a non-event. It was very, very average volume. Off the open, listen, bulls, there are going to be some bears that look at this and say, wow, did you guys see that sell volume off the open on Apple? Here's the thing. We expect high volume off the open, whether it's flat, up, or down. So that is well within the contextual means of what is to be considered normal. And to me, kind of a non-event. So bears, I'm sorry, but for me, I can't make any definitive statement off of that. Now, let's just briefly touch on this massive red candle here on the close. First of all, could it have been a data error? Sure. But let's assume it wasn't for a second. Even if we did see 6 million shares of Apple being traded immediately after the bell, which is a possibility, the candle itself was basically a non-event. Okay? The candle was very small with very small wicks. So, we likely saw a battle going on between both buyers and sellers if this were, if this happens to be real volume here. That basically led to a flat candle regardless, and the stock essentially being mostly flat after hours. I mean, it's down 13 cents, right? Whatever. To me, again, nothing definitive to pull out of that. So let's move on now. Let's start getting contextual about levels to watch as we head into tomorrow, Tuesday here, on Apple, I of course have what I always have pulled up, the most popular moving averages available, the 50 period and the 200 period. Now, bulls, let's start with you guys, okay? That 50 period is about 0.48% to the upside. The 200 period is about 0.84% to the upside. Both of those lines are well within range of a single day move of Apple, well within the ATR, okay? So, bulls, ideally tomorrow, I would love to see both of those get reclaimed here on the 30-minute chart as support. That's my only concern here on the 30-minute. I would love to see that. That would be a win for bulls here on the 30-minute. Bears, looking at the 30-minute here. You don't necessarily want to see an upside test of either, but if you see an upside test of that 50 period, the white line, bears, you're going to want to see that reject as hard as possible, and you're going to want to see this 50 period continuing to pull downside, right? Add a descending psychological barrier to help push the stock down, or add another factor to that thesis. Now, let's move on here to the 4-hour and take a look. You can see here that 50 period is the most immediately relevant. The 50 period is approximately 1.4% away. That 200 period is about 3.2% away. So the most immediately relevant is going to be that 50 period. Listen, bears, you don't want to see an upside test of that again. You just want to see the stock stay flat or continue downside into that 50 period, also continue downside again, bringing that psychological potential barrier further and further down. Bulls, ideally, I mean, granted, it is a bit of a move. You know, Apple doesn't move 1.4% every single day, right? But we've certainly seen crazier things on Apple, of course. So ideally, bulls, you know, a break and hold above that 50 period would be a beautiful thing, but just making our way up toward a test of that, and I would be fine with that here on the 4-hour. But let's move on to the most important chart of all, which is the daily. Okay, the daily is the most heavily watched. This here is one of the most heavily looked at charts in the world. And you can see here that 200 period, the 200-day moving average, is the most relevant one in the near term. It's about 1.4% away to the upside. Bulls, listen, I know, but a break and hold upside and reclaim that 200-day as support would be beautiful, okay? But the daily also more so portrays a really clear picture of what the obvious levels are. So not only am I looking at the 200-day, but I'm also looking at 180, and we've seen 180 hold as a support level in the recent past, just in the last 5 trading days. So bulls, ideally, hold 180, right? Hold 180 as a support. So bears, obviously the opposite of that. Any upside tests of the 200-day moving average, you're going to want to see a hard rejection, and bears, the primary objective here in the near term, like ideally tomorrow, Tuesday, if you're a bear, break downside below 180. That's what you're looking for here in the near term. Now, what was the options bias in the chain, right? What were the options traders looking at here today? 690,000 total contracts traded. Good sample size. We can get some good data out of that. 441,000 of those were calls, and about 250,000 of those were puts. So we're actually seeing a relatively heavy call side bias, call put ratio here on Apple. Okay, the overall ratio here is pretty heavy to the call side. Now, short-term speculators, right? What are they thinking? Those traders who are placing short-term bets, right? The 0 to 20 delta range, interestingly, 233,000 calls to just 105,000 puts. So not only are we seeing a pretty heavy call side bias on the overall ratio, but with the short-term speculators, we're seeing more than double to the call side compared to the put side, which is really interesting. Listen, guys, as always, make sure your risk is managed because, of course, the options traders, they can be wrong. They oftentimes are. But I track this stuff every day because it's real. It's a real bias that we can pull out of the market. If you got value out of this video at all, please subscribe to the channel. I'm covering Apple stock every single day. And if you want to come trade with me every single day, come join our private trading group at that first link in the pinned comment, and I'll see you soon.